Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking energy, big swings in the crude oil market today, getting all the way up to new highs for the year. As a matter of fact, highest level we've seen since 2014 at 75, 78 on the high side. And then crude fell 2%, really over 2%, to get all the way down into the 72 handle and then finishing virtually unchanged on the day. So huge swings. That happens in these holiday shortened sessions. Crude oil is closed tomorrow. We are getting API later today, but EIA will have to wait until Thursday. So the swings were a combination of things, not the least of which being the low volume markets. The tweet that President Trump released yesterday talking about Saudi Arabia committing to 2 million extra barrels of oil that caused some profit-taking crude oil yesterday was clarified. The administration put out a statement basically saying that Saudi Arabia just said they would commit to stabilizing prices of oil no matter what it took, not necessarily agreeing to the 2 million barrels a day. Contrary to that, Saudi Arabia really doesn't necessarily have 2 million barrels they can just turn on at the president's request. So it would be doubtful that they would just flat out just across the board agree to doing that. So the president and his administration clarified that tweet, which gave us a rally in the morning. And then we fell later in the day as OPEC and Russia reaffirmed their commitment to increasing production to that $1 million barrel a day level that they mentioned after the meeting was over, when really the press conference during the meeting talked about closer to 600,000. Currently, we're in a situation where Libya has essentially taken 850,000 barrels of production offline. That's per day. Saudi Arabia had already increased production by 700,000. To increase it by another million barrels from there purely out of Saudi Arabia would take a lot of their excess capacity offline, causing a potential supply disruption to wreak havoc in oil prices on the high side. So OPEC and Russia have reaffirmed their commitment to add this million extra barrels. So a lot of that will be coming from Russia because, as I mentioned, Saudi Arabia has already added to that. So this contributed to the swings we got today. On the high side, above 75, new highs for the year and highest level 2014, and then down below that 72 handle to again finish unchanged on the day. This is Bob Iaccino talking about crude oil prices. Holiday shortened session closed tomorrow from the CME Group trading floor in Chicago.